Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas. And in this video, I will also be going over United States natural gas, ticker symbol UNG, as well as 2x leveraged natural gas, ticker symbol BOIL, or BOIL. But before I get into these two charts, I did want to go over the commodity over here because, I do think it has been showing a lot of strength, inching its way higher over the past couple of weeks since I did the last video. And yeah, I do think it is looking pretty strong over here, not so strong with the other two. But, if there is strength here, I do think that will be reflected in UNG as well as BOIL. So I'm pretty excited about that. But I also am, bracing myself, trying to be patient as, I am holding UNG and I've been holding the bag for a little while. I am looking forward to offloading some shares, ideally at a profit. And so hopefully we will be seeing that in the coming weeks. I do think, we are getting ready for a breakout. So here, looking at the natural gas chart, what we can see is we have been making higher lows, or at least here, this was a double bottom, you could think of it, hitting the same low at a price of $1.71.9 on, let's see, March 14th, as well as March 28th. And then from there, we have been making higher lows. And we have been more or less respecting this uptrending level here, going back to the low hit on February 19th, with the other pivot point being here, the low on March 14th. And so from that level, from that low hit on the 14th at a price of $1.71.9, I did do this Fibonacci retracement going up to the high hit on April 14th, that being at a price of $2.03.9. And so from that retracement, we can see that we did, get a double bounce here from that bottom, and then we have been inching our way up to the higher levels, finding support there. We can see that the 618 here at a price of $1.84 has acted as support here, and then nearly tested it again on April 16th, kind of looking like another double bottom there. But we did get rejected here on April 3rd from the 236 at a price of $1.96.35, pulling back to the 618, bouncing up to, hit that high, $2.03.9. So really that being the basis of this retracement. So then pulling back from that to the 618, then getting rejected here from the 236, and now currently trading above the 382, which is at a price of $1.91.68. And given that the close on Friday, April 19th, was at $1.95.4, that being above this white downtrending level that you can see goes back pretty far in time here to the low hit on December 13th. We did get some consolidation right around that level, really just below it, forming a bear flag before continuing lower and then coming up to test that level here on March 5th, getting rejected, and then more recently breaking above that level, but not confirming. And so I do think that we might get a confirmation in the week or two ahead, ideally getting some closes above the 236 at a price of $1.96.35, or, getting closes above Friday's high, which was at a price of $1.99.5, or really just getting multiple closes above $2. I think that would be great, but getting confirmation would be getting a close above this high here of a $2.03.9. So I would look for that. I do think it would also be great to be getting closes above the high from March 5th. That was at a price of $2.05.6. So ideally getting closes, above $2.06. If we can start to see price getting up there, I do think that would be really good. And then I did want to step back so we can see some other levels to the upside, see where they originate from, and that I think price could be getting there. And so the low low hit on December 13th was at a price of $2.20.9, marked by this red line here. And so, I definitely could see price getting up to that level in the next couple weeks. So that is what I'm hoping for. And then I also have this blue dashed line here at a price of $2.50.6. That does represent, this gap that was formed here between December 8th on that Friday and Monday, December 11th. And actually the close on the 8th was at a price of $2.51.85. So that would be a more proper gap fill. However, we can see there has been price action in that range before. So, that gap has been filled. So really, I'm thinking just, a price of $2.50. I do think that would be really good for natural gas. But, if we are not able to get to that exact level in the next couple weeks, I could see there being some resistance right around $2.30. That was this top over here getting a wick high of $2.37.3 on January 25th. But we do have, this close and open right around $2.32. And so I could see price bumping into some resistance around there if we are able to get above $2 a share, get above $2.20. I think $2.32 would be the next level to be looking for. And so, I do think that there is a lot of strength in the chart here. And so I am hoping that is reflected in UNG and BOIL. However, they have not performed as well as natural gas. They have not been looking as strong, actually forming lower lows in some cases. So I do think we do need to look at the charts there. So here looking at UNG, I've done, a little bit of a different retracement here. Instead of going from the bottom to the top, since we have hit new lows, I did one from the top here, hit on April 9th, that being at a price of $16.09 being the high of that day, doing a retracement to the low, hit on April 16th at a price of $13.87. And so we have closed on Friday, April 19th at a price of $14.52, being up 0.69% on the day, but actually being a red candle starting up here, opening at a price of $14.71, just below the 382 here at $14.72, but then still, wicking below but closing above the 236 at a price of $14.40. I do think that will be a key level for us to be getting closes above, to be holding that as support before we can start to move higher, to then reclaim and close above the 382 at a price of $14.72. But I do have this yellow line drawn here at $14.25. That was the low hit on March 27th. And considering that was a low there, we don't want to be seeing lower lows. Hopefully $13.87 is the lowest we go. And so I could see $14.25 being a nice potential dip buying opportunity. And I actually did have a very small order filled during pre-market on Friday the 19th at $14.25. So that did serve me well, but my average is still pretty high, so much more to go to the upside. And so some other levels that do stand out here, from the low that we hit on the 16th, we did get a wick up to a high of $15 a share, which does correspond with the 50% retracement here at a price of $14.98. I do think that will be a key level to be closing above, just considering that it is, right around $15 a share. And then the next level up is the 618 at a price of $15.24, and then the 786 at a price of $15.62. But hopefully we can get higher than all of these levels. And so if I do take a step back, there are a couple things that I did want to point out. One is this orange level here at a price of $18 a share. That was the low hit on December 12th. And also, the high hit on March 5th was $17.96. So I do think $18 was acting as resistance then. I do think that will be a pretty key level for us to be getting to. Hopefully we can get there and we can hold. But, we are going to have to see. There is a lot here for us to be getting above. Let's see the high here of $16.09. Then, the next psychological level there would be, $17, the next dollar mark. So hopefully we can get above that. but I do think that $18 is going to be a key level, potentially acting as resistance again. But if we can break above that, I think that would show a lot of strength. And speaking of a lot of strength, one thing that I did want to point out here on the chart, might be standing out to you, is this uptrending line that I have drawn on the lows in the RSI. So if you notice with the RSI, we have been forming higher lows, whereas with the price, as I have mentioned, we have been putting in lower lows. And so while that may not seem that great regarding the price, with the RSI making higher lows, that is bullish divergence. So we could be getting ourselves set up for a move higher than 1609, higher than 17, potentially getting up to $18 a share and reclaiming that, as the natural gas chart is looking pretty strong. I do think that could be signaling that we will be seeing a breakout with the ETFs here. And so I am pretty excited to be seeing some potential breakout moves for UNG. And, I do think that could be coming in the next couple of weeks. And speaking of breakouts and, potential upside, let's switch over to BOIL. This is the 2x leverage ETF. And with this one, just like what I went over with UNG, we are seeing higher lows in the RSI, whereas we are seeing lower lows in the price. Even, this lower low that we saw that was hit on March 27th, that was at a price of $12.28. The recent low that we saw was actually a higher low, so I do think that is good. But from this pivot point in the RSI, the lows over here, the more recent low that we saw hit on April 16th, that was a low of $12.72. While that is not lower than this low, that is lower than the low hit on February 15th, which was at a price of $13.45. So lower lows in the price, higher lows in the RSI. That is bullish divergence. So hopefully we will be seeing a breakout soon. But before I get to the levels to the upside, I did just want to go over a similar Fibonacci retracement like the one that I did with UNG, just going from the high here hit on April 3rd, which was at a price of $15.17, then going down to the low hit on April 16th. That was at a price of $12.72, like I had mentioned. And so from this retracement, it does look like we could not hold above the 382. We did open above that on Friday, but closed below. And our closing price on Friday, I should not forget to mention, it was at a price of $13.54, being up about 1.35% on the day. So looking pretty good there. But we could not hold the 382 at a price of $13.66. But we did get a wick low on the day of $13.31, being just 1 penny above the 236 at a price of $13.30. So I do think it is good that we are respecting that level. We are holding above it. And so ideally, next, what we see in the next couple trading days is starting to see closes above the 382 at 1366. Hopefully, we see some closes above that. And also, since I mentioned the low on Friday, I should also mention the high, which was at a price of $13.93. So being 1 penny below the 50% retracement at a price of $13.94. So hopefully what we see in the next week is, starting to claim that level, getting closes above it. And what would be really good is getting it close above the wick high that was hit on April 16th. So that was at a price of $14.18, being just about 5 pennies below the 618 at a price of $14.23. So hopefully, over the next week or two, we are reclaiming that level and starting to stair step our way up these Fibonacci levels, just like natural gas has been doing. Hopefully we start to see that with BOIL as well as UNG. But before I forget, I did also want to mention the 786. That is at a price of $14.65. So hopefully we are able to get up to there. But that one might take, a week, more than a week, perhaps 2 weeks to get up to that level if we are showing strength, which it looks like we are looking at the natural gas chart. And then I did want to highlight some levels going back in time, one being this low that was hit on February 15th, also looking like that was a double bottom with a low hit at $13.46, being 1 penny above the yellow line here at 13.45. And so that does look like it had acted as support here, but we did break below it a couple times with these two candles below that level here, and then getting some candles, actually multiple closes below that level over here in the middle of April. But now it does look like we are starting to hold above it, close above it. So hopefully we can stair step our way up this Fibonacci retracement that I've drawn. But then I did also want to point out this orange level here at a price of $19.77. That was the high hit on March 5th. So I do think that will be a level to contend with. Perhaps though, before getting there, $19 right around there. It does look like we couldn't get any closes or opens above $18.90. The open on March 6th was actually at a price of $18.88. So I do think that if we are to get to $19.77, I do think that might actually be a breakout level if we are able to get through the resistance between about $18.90 to $19. I think that we might be able to take off from 1977, as there is not much above there. But once we do get to this consolidation level right around $21.40, that might be a tough level to break above, and maybe we would be finding some resistance, finding a top or a wick high around 23.83, which was the low hit on December 11th. So that might be some resistance for us there. But first, we do need to be focusing on getting above these levels in the near term. So in the next couple of weeks, hopefully the next time I make one of these videos, now doing it every couple weeks just because of my work schedule, hopefully we are able to see some closes above 15.17 for BOIL, or some closes above 16.09 for UNG. And looking back over at the natural gas chart, hopefully we are able to start seeing some closes above $2 a share, potentially getting to the level that I have marked here around $2.20.9. I do think that would be great. So that is what I am hoping for. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.